Trump's suspension of aid to SA was a shock and awe tactic, but it's more performative than substantive. That's according to SA's ambassador to the US, Ibrahim Rasool. He believes the appropriate response is to be resilient and patient rather than panic-stricken, and to remain engaged at all levels, public and private. Rasool's added that Trump doesn't have a particular grudge for SA, and that we should not think of ourselves as an exception and miss the opportunity for making common cause with others. Sustainably reducing SA's inflation will be harder and more costly than the Reserve Bank assumes. That's according to policy paper Codera Analytics. It says SA's high administered prices will present a challenge to the SARB's plan to lower the country's inflation target of 3 to 6% in what would be the most significant monetary policy shift in more than 2 decades. The papers caution that for the mooted reform to be successful, it would need a social compact to reduce government-related inflation and align public sector wage demands to productivity growth. On to wage matters. Some union in the Public Service Coordinating Bargaining Councils, or some unions rather, have accepted the state's 5.5% wage offer. The revised above-inflation bid does, however, need more than 30% support from other unions to pass the required threshold. PSCBC General Secretary Frikkie de Bruin says they're confident that the unions will be able to convince their members on the 3-year offer, as this agreement also allows for adjustments to the housing allowance, medical aid subsidy and danger allowances. Labour has until next Tuesday to sign the draft agreements in acceptance of the offer. Strong, that's how Telkom's described its third quarter performance. CEO Taukobong says the firm's data-led strategy continued to deliver across key metrics. Telkom's mobile business in particular saw solid growth. Service revenue on that end rose close to 10%, outperforming the South African mobile market. Taukobong added that the group's earnings before interest, tax, depreciation and amortization grew in strong double digits ahead of overall revenue. Pan-African Resources has flagged lower half-year profit. The gold producer says its headline earnings per share could register a slump of 41%. It cited a decline in gold sold, and it's also pointed to opportunity cost associated with the synthetic forward transaction of $17.4 million. Pan-Africans added that the final settlement in terms of that agreement will be at the end of this month. More detail will be provided when it presents its books on Wednesday. A plan's being plotted to slash car prices, according to BMW SA CEO Peter van Binsbergen. Automakers are eyeing government approval to convert unused import duty credits into the cash equivalent. The plans expected to cut production costs, slash retail prices and slow the flood of low-priced new vehicles entering SA. Van Binsbergen says that the proposals would be put to Trade, Industry and Competition Minister Park Stawu in talks on revising SA's automotive policy. Further afield, BP shares have hit their highest level since August, following reports that activist investor Elliott Management has built a stake in the oil major. Let's take a look.
Shares in oil major BP rose by around 7% to their highest since August in early trade on Monday. It came after Reuters reported activist investor Elliott Management had built up a stake in the company, citing a source who didn't provide the size of Elliott's stake. Last year, BP shares fell by almost 16%. BP has tried to restore investor confidence in the company's strategy, particularly since the resignation of former CEO Bernard Looney in 2003, after he failed to disclose relationships with employees. Bloomberg News reported at the weekend that US-based Elliott is seeking to boost shareholder value by urging BP to consider transformative measures. BP and Elliott have declined to comment. BP is set to report its fourth quarter earnings on Tuesday and last month warned of weaker results. Since taking office in January last year, CEO Murray Auchincloss has slowed investments in renewables and low-carbon energy and instead focused on higher-return oil and gas projects.